Hello, 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 everyone. Hope everyone survived the sell-off today. Pretty orderly sell-off. Again, if you're asking about capitulation, this was not a capitulation move. This was more of a start of a sell-off move than the end of a sell-off move. It's a pretty big sell-off. S&P down 320 basis points, Nasdaq, and they're still markets are still trading. So Nasdaq down 310, Dow down 319. So everything over 3% down. Russell 3% down. DAX 3% down, which closed a while ago. Eh, crude only down 2.38%, but this was a pretty big selling. Bonds, notes only up 18 basis points. Dollar, pretty big decent move. VIX, remember I said I was watching that 25 level, and we had that double, and we'll take a look how that played out. But before there, let me say good afternoon. Good afternoon. Finally, some reality. Flush, flush, flush. I think this is just getting started. Doesn't mean you can't have rallies now. We're back into selling rallies now. Because remember, long term we are bearish. We finally broke down yesterday. The Nasdaq closed below that key 62.5%, and which favors the lower price action. Today, Dow broke down below the 62.5% and went straight to the 75% harmonic right here. So we'll take a look at that. Good afternoon, Davey. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers, please come back, leave a comment, and like the videos. So with that, this isn't going to be a super long session. Remember, we will do it on Sunday. I still don't know why this is slightly blurry, but going to have to work on that this weekend. I don't like to make too many changes during the week, because then there we go. Then we get into, if I break something, we might not have a live stream. And I don't really want to break something. So let's jump. Can you speak on what you look at for it comes to capitulation, VIX, volume, etc.? Yes, VIX spiking above, generally up into upper 30s or even higher than that. I like high volume with then a final push where everything throws in the towel. And this wasn't it. This is not a capitulation move. This is a sell-off, a key break. Remember, we had the Dow, the double top, which definitely triggered today. So on any rallies next week, it could be a nice, really nice rollover play. And a lot of times with capitulation moves, you will get that sell-off flush intraday and then the strong bounce back. Or you'll get this where it's essentially candlestick math. See, if you add these two candles together, you get a long tail candle. So this is the kind of stuff I like to watch for. I like to watch for that intraday decent reversal is the first warning sign. If you don't get it intraday and you get it the following day, like back here, let me show you. See how this is more, and I'm not saying this was a capitulation bottom, but there's the two major kinds of bottoms where it flushes down, and then the next day you get a strong reversal day back up on volume. That can be signs that short-term low is in. Capitulation moves are overused. This was pretty much a capitulation move back on the 24th of February, though. This was like intraday getting hammered and then just the snapback and the massive rip your face off rally. This was pretty much a capitulation move on the 24th of January. So, and this one came early. See, we had the 24th, right? Now, so what's this? We can't have a capitulation move. It's only the 22nd. So, Jukes bounce off the March lows in the NASDAQ. Do I expect a bounce? I will watch for some temporary support there. Now remember, when we closed below that 62.5 level, which was right here yesterday. So here, let me clear up some of these levels. See, here's the 62.5. When we close below that, that favors a return to this 13.236 area to the most recent lows. It favors a return to this, Paul. So I'm expecting it to return to there. We might get some temporary support from there, but I'm expecting that temporary support to eventually break. Because this comes down, remember, we get into these low areas. It's a triple bottom. It actually gets almost to a quad bottom then, which favors slightly the continuation move. But given the macro environment, it could see a substantial move down at that point. So that's what I will be looking at. Just wanted to take a look at the heat map. I mean, this is ugly. This is just pure ugly. I mean, look at this. You got to go find the green. It's find the green. So just wanted to recap that. And also, we are still in very negative. Remember, the whole day as it kept selling off, you kept getting more and more negative gamma. Really pay attention to this, especially in these market environments and these bear market environments, because as the negative gamma accelerates, and it can even keep accelerating down to about on the cash about 1250. I mean, sorry, down to about, what is that level? That's around 4175. So that's where we can see it amplifies the moves. And for anybody new here, why does it amplify the moves? Because for hedging, for these huge positions, when you're going to hedge them for market makers and for the firms that sell these huge positions, they have to then hedge. So, and when negative gamma, they have to then sell into the declines and buy into the rallies. So it doesn't just amplify declines, it amplifies rallies too, which is also, you can get this deep into negative gamma. Let's say we come down next week and we do find a short-term bottom. Could you get a temporary rip your face off rally again? Yeah, you could, especially since it's in negative gamma territory. Do I have anything that says that's going to happen on Monday? No, this is still play-by-play sort of in market environment. Longer term, yes, lower price action. When do we put in a bottom? I'm going to do some more analysis tomorrow, and I will let you know what, if anything, I come up with for the Sunday live stream. So make sure you tune in 3 p.m. Central on Sunday. It really feels like the indices can't really crack yet. Names like Netflix, Peloton, and other growth names are way oversold. Yeah, and you might get a slight bounce, but then the sell-off, I mean, if you start looking at stuff like Apple today, that's starting to break down. Look at the next harmonic hit, 161.57. You're also, remember, if this starts closing from the lows back on the 14th of March to the highs to the 30th of March, 62.5, you get a close below there, then it favors Apple to return to its lows. So you have stuff like Apple that's still huge weighting. That starts breaking down to these lows, and then beyond, you could really see some market carnage. Some things have already sold off, but if it rotates into more of these mega caps like Tesla today, and there are some very interesting price action propping up Tesla to keep it above 1,000 today. But Tesla did not break down at all. This would have been way worse carnage if you had Tesla break down. So once you get selling in Tesla again, you had Apple, Microsoft. You see Microsoft here. We closed below the 62.5 back on the 11th of April. A little bounce back rallied into the rotation zone, and yesterday rotating back down. And today, remember, once you close below there, statistically it favors the 87.5 to 100 returning to this area, and it just returned to this area. Now, Microsoft also, look at this. We have this. Now it's a really sloppy head and shoulders, but it does favor it would technically be a declining neckline, but I only trade them with horizontals. But I'm using these for levels lower. I'm watching for this thing to continue to break down. Another one. Google. This does qualify as a double top. It is very sloppy, but it does qualify with all the research and testing we've done. That's triggered on a weekly basis. So now even snapback rallies back to this 2,500 area, we'll watch for rollover plays because this could be a multi-week downtrend. Okay? So these are the kind of things I am watching now. You know, Amazon now back below the 62.5. So this doubles pretty much over. That couldn't even get to the first target. So now that favors Amazon returning back down to possibly 2762 to 2670 area. You could see these. Here's the custom mega cap index, and look at this. Now that's below the 62.5, so that favors further selling in the custom mega cap index. You're gonna still get these pressures, even though, yeah, you have stuff like Peloton and Netflix that have already been beat up. You have a lot of these mega caps that still can fall a long way. All right, so don't get blindsided. You know, and this is why it's tricky to trade these bear markets, because look, we'll go back to that in a second. I was just looking still what the numbers were. See, P to E still on Apple is 27. I think P to E on Apple is going to at least return to 16 over the next few months. I think you're going to have a lot of things return to that 16 area for PE, if not overshoot to the downside. Google still PE 22, so this can still go fundamentally a lot lower. What Facebook did? I actually didn't look at Facebook. I glanced at it a little earlier, but I didn't see how it closed. Breaking down below the lows from the 7th, so this has room to still really break down. Hello, Geo Mission. Finally got our gap on ARC. What'd I win? What'd I win? Did I win something? It filled the gap to the downside first. Remember, we closed below 62.5. What does it favor? The return to the lows is statistically very relevant. That's the only thing I was basing that gap fill on. So, you know, and now ARC back to the prior harmonic. We break lower. Look where my next major harmonic is for gap. For ARC, 40.51. Let's put up the minor levels too. So that was fun. Thank you for that little fun game. That little, I don't know. That was just a fun little thing. That put a smile on my face. So intermediate level is 49.33 with the cluster there. So remember, from this whole run up, let me review something here. So here's the lows from March of 20, the COVID lows up to the highs. Remember, we closed below 62.5 back in the beginning of the year, 10th of January. What does that favor? I'm just going to keep reiterating this, because if you learn this, it's going to save your butt when you see these key closes below the 62.5. Why? Because you're not going to try to call an early bottom, because that still favors a move back to 48.64 to even 32. So somewhere in this area favors statistically for us to return to, and we are getting close. Now, is there a potential double bottom? Yeah, but that would have to do some really heavy lifting to trigger. I just want to, this is why, don't fight things that are closing below the 62.5. Find strong things, and if you don't, and you're only trading from the long side and you don't trade from the short side, you sit on your hands. Looks like short-term monthly bottom. We'd have to see. I mean, I don't have a bottoming pattern yet, and I still favor lower prices. So this would not be a bottoming pattern yet. Can we get bounces? Yes, but I'm playing the odds and the statistics to state that we're going to continue. Even if we bounced a bit next week, we're going to continue lower until we hit these levels. And then if we break those levels, we're going to hit a lot lower. I mean, we're almost to the level in the NASDAQ. We're not far off. And now the Dow, again, triggered this double top pattern. So this favors lower price action. We have a lot statistically that favors short-term lower price action and long-term lower price action. We'll rely on Apple to go down and pick up some. And for me, Apple, if it does have a short-term bullish thing, would only be a very short-term trade. Stock markets rally after the rate hike historically until the next rate hike, and then QE. I think these markets are in for a longer term hurt, a longer term smackdown until the long term systems say go back into buy mode. And this, if you still look at the big context, let's take this in the big context. Here's your NASDAQ. Here's the rally from COVID. This, we're not even beginning to do some major damage. Remember, even if we return to that 50% rally from just the COVID lows, remember they're going to do quantitative tightening. The 50% rally is still 11,690. We're a ways off from there. If we return to the weekly 200, which the last time we tapped that was the COVID lows, we're back down to 10,635. And that's not even, look at this run up. I mean, this market, this has a lot of reset to do longer term. Now, if they change stuff around and they stop, say, we're going to, inflation, schmation, we're going to stop the rate hikes and we're going to start QE again, then the outlook will change very rapidly. Until that happens, which I don't know how they do because inflation will just get so entrenched then and start crushing stuff that, and they're not going to get a soft landing with this. They're going to get a hard landing recession. So it's going to be very interesting. Yeah, crazy thing. Fed hasn't really raised rates yet. 25 basis points so far, maybe. It'll be 75 basis points in May. And quantitative tightening, which they're targeting for June, hasn't even started yet. We could be heading to the breakout in the indices. We could definitely, and everybody says, well, look, I've been seeing it flying around, and the people I talk to, the market's already priced in all these rate hikes. No, it hasn't, because the rate hikes haven't even happened yet. Now, if we start seeing rate hikes and then some really strong rallies, yes. But fundamentally, we got to do a lot of reset on these metrics. And remember, the tightening and the rate hikes hurt technology. And a lot of this run-up was due with major technology that still has very high PEs. Sterling, welcome. I posted a TTWO 1 hour double bottom that has hit the first target. Don't know what happened, but it had a huge 15-minute candle at 12:45 p.m. Looking for it to top at the daily rotation zone. Now you had this. That's almost. You can still trade this. It's almost a triple here. That's very ugly. But just little bounce. It's not my favorite pattern, but again, that would just be a short-term bounce play because look, you're against the daily rotation zone. You did have a little divergence here on the daily though, so that's a little interesting play there. We can keep watching that one. Veil triggered the daily double top and closed below the 200 SMA. Put still printing. Yeah. There you go. This could, even on bounces now, this could still have a fair amount lower price action. The Fed's $8 trillion rally. Yep. It's been so juiced. We need to get this back to better valuations longer term. Fan lines are going from steady to parabolic. See, and this is where how will I judge when this is really, really over? When I get a major bottoming pattern, and I'm not talking a short-term capitulation bottom, I'm talking a major bottoming pattern, or the long-term systems kick back into buy mode, which I will let people know. Then it's time to start scooping stuff up. But for me now, any bullish plays, except for like consumer staples or stuff that I go in the sector review, these sectors that are really strong, those are still mid-term bullish plays. But a lot of other stuff, like remember I said communications. Remember communications? Where's my remember, oh, not the EV list. What am I doing? There we go. Xlc Communications, right? Let me get back here. Xlc Communications. Been in long-term sell mode. All right, long-term sell mode since back in the beginning of January. And look at this. Communications, there's your weekly thing. This is why when it's in long-term sell mode, this is stuff you don't want to touch. Why am I bringing this up also? Because you have things like Verizon. What are they in? They're in communications. Look at this with their earnings. Yeah, they had a rally, but this is where, you know, they had that little corrective rally. I don't want to be owning this long term. You know, this is the kind of stuff you want to avoid. So what did Altera do today? Altera finally getting a reversal. Look at this. Again, second harmonic. Yesterday, spike through. Today, big reversal off it. You gotta love these things. So, let's see where else. Mike, I know you're a pure technical and price, but thoughts on PEs on names like Netflix and other names that are profitable yet beaten down? What is the... Again, Netflix is going to be based off more instead of PEs, just more of the subscriber base. But PE still 1980. Could this get back down? The growth story on Netflix is over too, so it's can't be traded as a growth stock anymore, really. So yeah, could this find some stabling price action and then still drift lower over time? I'd still be looking to sell any rallies on this. And any play on something like Netflix would be short-term plays only for me. If it made like a little pop play and we started getting some rip your face off price action, yeah, this could move back up temporarily, but then it'd be a rollover play. VIX back over 25 like you've been waiting for. Yeah, and I really paid attention on that 4 hour. Close above there. Then it was like, all right, full-blown bearish mode today. And look exactly where it stopped. You don't think these levels work on stuff like the VIX and everything else? There you go. Right there. Dead to the first target. You can go back. That's why these live streams are there. You know, they're not edited or anything else. They're there. You can go back and look at the one. I think we put it up this morning. There was the VIX. Here's your VXN, which triggered yesterday, and look at this follow-through so far. Almost to that 35 level. I'm expecting to hit that Monday. Even if we then reverse back down with a little pop rally, I'm expecting it to at least spike there initially. Let's see. So these are not that beaten down yet. Things can get a lot more beaten down. This is not. This is still in the early innings of a potential bigger sell-off. And people are still not scared yet. They're starting to get a little more scared, but they're not scared yet. MO still inside bar. Still want to call it Philip Morris. That's how long I've been trading this crap. Yeah, it's inside bar. I think we will get that bigger pullback though, which will be really nice. Getting a little extended, but even on a pullback back to, I mean, this is where you always have to take things into perspective, because even to a pullback into this 52, 60, 53 area, it's just a return to the weekly rotation zone and a return to the major resistance becoming support. ZM dropped below 100 today, closed just above. Now you're watching this. See ZM still 22.45 and the growth story's over. Now, is Zoom's not going anywhere. There is a potential double. So I will keep an eye on that. It would be an aggressive trade to the long side, but you know, this could easily still get down to the 60s again. All right, then that will start getting interesting. Now, I'm not saying we won't get rallies. We got the little rally here and then the rollover play. And that's your weekly double. There's what it looks like on the daily. So yeah, could that trigger and pop it back into the weekly rotation zone? Sure, it could. Is it a long-term buy yet? No, it's not. Not for me. Not for me. Yeah, VXM move to, yep, it would. Well, that's the NASDAQ VIX, so that's the volatility of the NASDAQ. But that's where we stand now. I think I'm going to wrap this up unless you want me to look at something specifically right before I do, because we can also look at more things on Sunday. Target finally getting that pullback. I'm watching this 236.37 area on target. I just want to peek in on that. Walmart finally, significant reversal day here. But again, I could get back to 153 easily, and then I could watch for even it could get back to the prior here. Get some more selling pressure. Could Walmart get back to 151 and retest his prior major breakout zone for another push higher? Yep. Especially since cycles are still at the top on the weekly. This could easily pull back more. HYG, your high yield corporate bond index, breaking down. I'm expecting this to easily head lower. Breaking this key little low here. My next target is a 78.32 to 78.51 on that. So yeah, watching for high grade yield, and then I'm still thinking we're going to come down and test over the next little bit the 75 level over the coming weeks. Rich says bad day. New 50-week low is, I completely agree with you, Rich. Talked about that earlier. I completely agree. Sorry to ask the basic question. If it's double bottom triggered on a 1 hour any time frame, what are the chances that it will hit first target? The chances that it hits the first target are in the upper 60%, close to 70%. It's upper 60s. And remember, the longer time frames have slightly higher probabilities than the lower time frames. So statistically, it's a great pattern to learn to trade because you put probabilities very strongly in your favor. Let's just peek in gold. Gold pulling back to this key buy area, and then the really nice back up the truck buy areas down here. Silver, again, why is this selling off? Because you're going to get a lot of sympathy selling. You're going to get people who are taking hits on other stuff, close out their precious metals stuff. So longer term, these are just great pullback plays. So no, you don't get greedy on the rallies, unwind some, and then we could be on cycle bottoms. I'm going to keep a close eye on silver next week. Cycles could be getting to a more of a daily bottom and the weekly bottom. So silver might be in an interesting position coming up next week too. So there's some stuff. Gold also getting to cycle bottom on the daily. RSI getting to the oversold area, getting to some key support area, and the weekly cycles are trying to put in a bottom. So I'm going to be looking at some of that more closely this weekend. Mike, when it comes to forward, reverse, double harmonics, are there probabilities for each level to get hit? Uh, that's a hard question to answer. Why the it's more probable you're going to hit that 25, but you're talking so many different time frames and so many. It's a really tough question to hit because a lot of stuff I've done with the forward and reverse harmonics has been done in conjunction with various like system setups and everything else, like using them in conjunction with the doubles to identify stuff, using them in conjunction with rotation zones to set up. So they're not just tested on their own. Macro question: why are staples like MO selling off today when they usually run counter to market down moves? Because again, you got when things are down 3%, you get a lot of selling, and also things like MO. Look at the run it's made. I mean, this has been a run since, let's just take it from the beginning of the year, even. Beginning of the year, up to these highs. What's that, 20%? Can it get this has had a pretty major run. People still want to lock in some profits, hitting oversold, hitting divergences. That's why I like these to still watch for pullbacks in them. Because you still don't have everything just go vertically. I mean, so many people have been conditioned to things just keep going. So that's, I mean, you look at this. I mean, again, another great play has been Coke. All right. Look at this run, though. Since even March. Look at the run since March. Let's just go from not even the lows that close. What's that? 15.76%. So let's just go to here. Let's just go 15% on a 15% run. You don't think there's going to be a pullback in this kind of stuff when there's selling coming in? I mean, we could see Coke returning back to here. And then that's a consumer staple. So you're going to see selling pressure when you get this much broad selling. You're going to get on also things like this. Again, divergence play. See here, higher high, lower high RSI, cycles coming off the tops and still rolling down, setting up just for a pullback from a technical position. Does that mean it's not a good play in the future? It'll be a great play in the future again. I mean, the only thing that's troubling me with Coke is the P to E is still, if you look at here, it's 29. So at some point, this is going to get a much bigger pullback too. SQQQ double bottom still in play. SQQQ. How can you even see it? Oh, there we go. I hate playing these ultra pro shorts. They actually are horrible. Unless for a long-term play, for a short-term pop, yes, they are fine. It could get interesting if you do get above that 52.87 mark. Ken, welcome. Did you go over to VIX? Made a nice move up, yes. Once it gets to around 35, again, don't just go off those numbers. Please, that's where people pump this out on other channels. Look, that's where it hit this last time, but I'm real interested in not necessarily a good buying opportunity for tech. There'll be a couple bounce plays, but you have to quantify your buying opportunities because still bounce plays are still to be rollover. Now 35, does it get to 38? Does it get to 43? If we really start breaking down, you could be in the mid 40s. So don't just rely on some number. Watch for the patterns. We're starting to get topping patterns. Okay? And that's when you look. You don't try to say it hits a number and then, okay, that's some magic number. The VIX gives, you start watching for these kind of reversal tails in there where intraday they start reversing. That's when you start looking for patterns in key stocks. BBBY made a weird pump before the market close. Whoa. That is a... I'll have to look more into that. Look at that move. That was some massive buying, unless somebody knows something, because again, that's at some point is a takeover candidate. Did that just confirm the double bottom? That could be interesting. I got to look more into that. You are welcome, Sterling. Thank you. Are welcome, Amit. Yeah, I'm going to, again, join me back on Sunday. Just look at good range to start looking for topping. Yeah, and you can set an alert there, but start looking for the topping signs. I just want to clarify, because when people see comments like that, they're just going, especially people who might not be in the chat, people who might not be long-term members, they see somebody throw that out there, and then they're like, oh, VIX hit 35, I better start buying tech. And that's just what a lot of these recent people have been doing, even for the past couple years. They think there's some magic level, and all these channels out there who've been around only for, a couple years, I'll call them the COVID trader channels, they're just, oh, when it hits this level, just go buy. And then people get slaughtered. It's why a lot of people are still going to get utterly destroyed in this market, especially if only been around since like 2018. They're going to get hurt unless they're a real student of price action and they've done their research and they manage their trades very well and manage stop losses. Just seeing what Hood did today, which reminded me of William, who has had too big a position in Hood. This is where you just got to be careful. So if you're listening, William, I hope you got out of your calls. Selling bye-bye, baby. Help us out by retweeting some of Path Trading Partners' tweets, please. It will help increase our range and views. Yes, Sterling is right now doing the tweeting on Path Trading, trying to grow us and trying to grow. He's doing this out of his goodness of his own heart. So if you're not subscribed, please subscribe Path_Trading. He's putting out a lot of good, actionable information on there. And even if you're just trying to learn setups, you can just look at that feed. Stuff he's putting out there. And if you find stuff, retweet it if you find it valuable, because that will get us a greater breadth and we can help more people. That's really what I'm most worried about and focused on, is helping as many people as possible navigate this. Because as I talked about, you have people, look, if you started, let's say you came on board even in 16, look at what the markets have been. It's finally changing. And look, we could be getting a monthly close below the rotation zone, which would be very significant. But these markets, look at this. You don't know, you haven't experienced this kind of market, really. You've experienced a couple minor pullbacks. So that's what we're out there for. Well, that's what I'm out there for. And I appreciate everybody helping spread the word and getting this stuff out there. And at least people, I don't need to have all the answers. I don't need to have the magic, anything. I just want to get people a different perspective than you take all your money, you put it in one tech stock, and it's going to the moon. BBBY moving on bye-bye, baby. I got it, Paul. Thank you. More people start trading after COVID crash. Yeah, and they don't know this. And it's, again, they expect the everything's a a meme stock or a Tesla, and they're not used to when the markets turn around, what can happen. And especially if they don't manage risk first. Remember that, always risk first. It's the one thing you can control. You can control your risk. It's why I talk about, I don't want people going into over heavy positions just because you think something's going to happen, because it doesn't have to happen. Even if you get a great double bottom pattern in your favorite stock, let's say it gets oversold, your favorite stock, the VIX goes above 35, and then you're like, oh, that's a great double bottom pattern. Mike says these are the probabilities. I'm going all in. Well, what if it doesn't work? What if the markets just smack it down again? Then what? You've put all your eggs in one basket. Now it's harder to recover. A lot of people, trading is tough. And what separates traders and good investors from everybody else is longevity. It's not catching a couple good years. All the traders I knew, a bunch of them I knew from the .com bubble that, I made 120% last year. I made 300% on my options in 3 months. And then it's went all poof. Bye-bye. They weren't trading anymore 2 years later. They were done because they thought that that's what the markets always were going to be. And that's not what the markets always are going to be. You're going to have these kind of markets too. And then again, you keep your risk light. You keep your positions lighter if you're fighting against trends. You sit on your hands more. You take calculated risks in strong sectors. It's why I started putting out the sector review weekly, because those are the sectors, especially when we get a still long-term buy, short-term pullback, we go into those sectors, we watch for strong stocks in those sectors that have great patterns. Those are the things you put your toe in the water on. And then when we get that huge, the major bottoming formations, the major long-term buy signals again, which aren't going to call the exact bottom, by the way, that's when we start going, okay. It's like back at the 2009s. Okay, now we start accumulating a lot of stuff. Now we start getting in those long-term positions we might ride for a year, 2, 3 years. So just take that, and everybody watching this on replay, I hope you listen to some of this. I've been around since 92. I know I don't look that old, but I have been around this for a long time. And I've been through multiple of markets that are hard like this. You are welcome, Sashi. Always use a stop loss, and always know where your good advice, Rich, and always know where your stop is before you get in the trade. And if you don't want to put it in the market, set an alert. Okay, but put either an alert in or your stop in the market, and know where it is before you get in the trade. Because the worst thing that can happen is you start getting in the trade and then you're like, well, it's going against me. I'll just put the stop a little farther away. Or I don't know where my stop is. I'll just know when to exit. Then you keep, it's not time. It'll bounce. And then that you could have taken that, that 5% loss, and now it turns into a 20% loss. Not a good idea. End of day action looked like hedge fund closing both short and long positions. Real stocks like Apple went down, and crap like Snap and Peloton went up on short covering. There could have been some short covering today in stuff, but there was, what did Peloton do at the end of day? By the way, that double never triggered. That's why you, again, don't front run unless you have a different signal to front run. Yeah, you got the little bounce. I see that. Yep, that was definitely probably some short covering based off the end of day market action. Peloton's trying to put in a base down here. So we shall see. All right. Can we look at FANG index? Which index specifically? I went through a bunch of those stocks already. Is there a FANG index? Is there a FANG ETF that I'm not aware of? There might be. I mean, my custom index, which is now I call it my mega cap index, closed yesterday below the 62.5. Now continued. I'm watching for it to retest these lows areas. So that's why I'm not bullish on these things, even on bounces at this point. There wasn't a lot of. I disagree, Sashi. There's a lot of volumes, but it was down volume price action. Can we check UPS? Sure. Sorry, I had a double up there before. That was a nice tradable double. UPS, that's, oh. Let me clear this up from the old stuff. When's UPS's earnings? This is. I'll build a custom index. Oh, you want my mega cap custom index, Sashi, which I went over again. Yeah. If you want me to build another one, let me know. Earnings when 26th of April, so that's Tuesday. This would just be a horizontal channel play at this point. And your harmonics going into earnings. Let's just see. Those are the harmonics. Horizontal channel play. So I'd be focusing, if it breaks down, about 182 to 180. 181 to 182.34 would be my area I'd be focused on in the short term. To the upside, this is where, if anything to the upside, is ugly to me. Because you have the rotation zone against it on the weekly now. You have the daily rotation zone against it. And even if you pop above here, you're smack dab right into all this prior support that was broken becoming resistance. So there's nothing yet to the upside. And anything on a little breakout horizontal play would just be in the rotation zone and would be super aggressive for me, especially with earnings coming up. 175 support. Let's take a look at that weekly. I got the harmonic at 176, the major. And then here's your other level. Right there, 175.18. There you go, Rich. There you go. Is that a bearish flag? No, that's. I guess you were asking about what this would just be a horizontal corrective channel. So if you also look at your sell-off harmonics, so you on this most recent sell-off, remember there's two kind of corrections. This went up a little, but this is pretty much a horizontal correction. You see, working off the oversold condition. Cycles worked off their bottom into the top, and now it's rolling over again. So it's not really a flag pattern. It's just a horizontal correction pattern with the downward pressure from the rotation zone. All right, and it was magic. Now you see it, now you don't. Okay, with that, dogs are getting a little crazy. It's raining here. It's raining cats and dogs here. Major thunderstorms. I'm going to wrap this up for now. Hope everyone has a great Saturday, Sunday. Be sure to tune in for my sector review. Really appreciate the views on that. And please, if you can attend live, please do consider 3 p.m. Central on Sunday afternoon, and we can take a look at some more stocks, and I'll let you know what my research digs up with the markets to prepare us for next week. You are welcome, Rich, and everybody else. Thank you for viewing. I'll talk to everyone later, and you as well. Have a great weekend. Thank you, Ted. Thank you, and everybody. Thanks for the comments. Please come back, like the video, and leave a comment to get it also. And please do retweet some of the past stuff on Twitter. It really will help us grow. We really need to kick this into high growth mode to get this information out to more people. Talk to everyone later. Bye for now.